For the latest in strategic affairs, subscribe to our YouTube channel. Click the bell icon for updates.
Hello and welcome to StratNewsGlobal. I'm Surya Gangadharan. This evening I have a special guest, Aashish Chandorkar, the first non-babu, the first person from the private sector to join India's permanent mission at the World Trade Organization in Geneva. He will be a director or a counselor there. He will provide, I presume, information, guidance, advice on the range of policy issues relating to India and the WTO. Ashish Chandorkar, congratulations and welcome.
Thank you, Surya. It's a pleasure to be here on the StratNewsGlobal platform.
And Ashish, just for our viewers' sake, how do you describe yourself? You are a management consultant because you have a hefty resume.
Well, by profession, I was a management consultant. I exited my corporate career, let's say, last month. But I've also been working on issues of public policy for the last 7-8 years. I used to run a foundation by the name of Smile Foundation and a podcast called Bharat Varta, both of which focus on issues of public policy about areas like infrastructure, energy, uh, power sector. So the idea was to fill the gap between the emerging economy and the understanding of the policy issues and help them navigate the larger landscape in the country. I also used to write a lot in the media. So yeah, I mean, it's like having two different lives, a corporate life and what I was doing on the policy.
And you'll be filling perhaps a key gap in perhaps our approach to WTO issues, international trade, etc.
Yes, I mean, of course, the expectation is that someone coming from the private sector would bring in experience around the real world issues and highlight the concerns which the industry would have on the trade subjects. So yeah, that would broadly be my contribution.
So, Ashish, how would you describe the current international trade environment? Is it good, bad? I mean, which way is it moving?
So international trade has been a little lukewarm with the COVID situation globally. There have been physical restrictions as well. Of movement of people, movement of goods has been restricted. Plus, there have been trade tensions, as we know, between the two big economies, which is the US and China, and this has been going on for several years. So this also predates COVID as such. And the repercussion of that is that the world is still adjusting to how those two powers come together uh, and interact on the trade forums. This has also given rise to several countries trying to, and I mean, of course, amplified by COVID, several countries have been trying to create supply chain redundancy type structures where they are not impacted in case more such disasters were to happen or more such events were to happen. So I think the world is adjusting to those realities in terms of the larger powers not on the same page, and trying to create resilience in their own domestic economies.
But you would say that India's exports have been growing. I mean, I've been reading some of the figures; they are very, very encouraging. You think this trend will hold?
Yeah, quite interesting data actually. So just as a perspective, until February of this year, India only had 5 months ever in the history of our international trade where our exports were more than 30 billion in the month. And when I talk about exports, I'm talking here about goods exports. But since February, we have had 5 continuous months of 30 billion plus exports. So March till July, and the August numbers should be out, I think, in early September, another 3-4 days' time. The exports are holding out pretty well. Initially, people thought that this was because of the commodity cycle. We were exporting raw materials and so on. But as it has emerged, especially in the month of June, July, where a lot of other sectors have also seen a big uptick. For example, the engineering goods exports was the highest ever from India in July at 9 billion. Textiles exports have been growing as well in the near months. Our share has slightly gone up in the last couple of months in the global exports of textiles. Agriculture exports have held up very well for India. So we are targeting about 400 billion of goods export this year. The current run rate is about 390. I mean, in the first 4 months we did about 130, so that's about 390 for the run rate. But the target is 400 billion for this year, which we've never achieved. the past numbers. I mean, we've done 340 to 350, 360 range in the past, but we've never gone past that. So this will be the first year
Okay.
ever that we hit 400. And services exports also, which is as the remote working increases and as the attractiveness of India as a destination to work from on, not just on the traditional areas like IT and process outsourcing, which of course we are already leaders in, but even more personalized services like education or learning yoga, for example, or just tutoring. I think a lot of those things are also coming into play, and services exports also are now expected to hit about 220 billion this year. So this could be the best trade year ever for us between goods and services, about 600 to 625 billion range. So pretty exciting, and I think given that 5 months we have seen fairly robust growth with all the challenges around the shipping industry constraints and so on. I hope that this continues, and I think there's cause for optimism given how the data has shaped up in the last 5 months.
Okay, so with exports going up, it does suggest perhaps that there's an uptick in the economy. I'd like to take a look at that, kind of moving backwards into how India may be generally faring. We've had a fairly lackluster years since the pandemic. So, in your sense, how is the economic situation in this country evolving?
Right. So we are due to get the GDP print for Q1, which is April, May, June quarter in the next. I mean, typically it comes on the end of the month, so 31st August.
Yeah.
Last year, if you remember, the first quarter GDP, of course, shrank significantly because it was a lockdown quarter, and the GDP dipped almost 25%. India had the most severest of lockdowns last year when the COVID pandemic hit
Yeah.
us. Now, this quarter, the expectations are that we will hit 9.5 to 11% range. I mean, different estimates, different economists have given different estimates, but largely they are in that range. It could have been a slightly higher number, but then again, we had a lockdown situation in partly in May in most of the states, and also in June for some of the large states, especially in South and in Maharashtra. So the number could have been higher, but the current estimates are 9.5 to 11. Of course, there's a base effect. I mean, since the GDP this quarter last year was low, the growth number will be high, but for this quarter will be high. So, however, I think most experts agree that this has been a V-shaped recovery largely in terms of the GDP print, and we expect to continue the momentum in the next coming quarters as well. One proxy, which is essentially the GST numbers, for example, right? Because GST is a tax on activity, on economic activity, and that's been fairly robust since October of last year. Once the economy started opening up, the GST numbers have been fairly strong almost every month, including even in the month of June this year when the economy was kind of shut down. But I think the consumption which could have been done, let's say digitally or on areas which do not need physical service, I mean physical presence like services. I think the consumption has been fairly all right. So I think with those GST numbers in place and other proxies like power consumption, the number of e-way bills generated in the system, I think all of that points towards a fairly strong recovery, despite the second wave hitting us in the first quarter. So again,
Mm.
we should have the exact data in the next 3 or 4 days. I think what is of concern, I think there are probably of two concerns. One is, of course, inflation, which has been on the higher side. Typically,
Yeah.
RBI expects inflation to be in the range of 4 to 6%. Now they are saying that they could be in the 5% plus is what they are expecting in the near future. So, and there's a global debate going on whether the inflation right now is a transient phenomenon or is it basically a more permanent feature, and also that whether it is a supply side phenomena that there are factories closed or there are disruptions in supply chains, which is why there's inflation, or there's inflation because of other factors. So I think that some of those issues need to be resolved, and in the next few months, RBI has to take a call on some of those challenges. The second issue, Surya, is of course the fact that the high touch sectors like hospitality, tourism, retail, some of those, of course, have been hit pretty badly by the
Very
pandemic.
badly, yeah.
So, while the jobs in, let's say, manufacturing or the more traditional services environment will come back, or they might have already come back in most cases, there could be a few sectors which might undergo a longer stress because of the structure of how the COVID pandemic has played out. And of course, the unknown here is a third wave. In case we get one, then there's
Yeah.
you know a different challenge to deal with. Otherwise, I think otherwise it looks like there's good cause for being optimistic for this year.
How do you see the fact that the stock market is doing so well, yet jobs are low, productivity is yet to pick up? I mean, there's a bit of a dissonance there.
So, two factors here. I mean, firstly, stock markets tend to be forward-looking. What has happened during the last 18 months or so is the large companies have cleaned up their balance sheets. They have, you know, uh, paid off their debt in many cases. The financial ratios in which the companies operate, those are looking brighter and more, let's say, much better than what they were before pandemic. So, in case, I mean, in effect, they have freed up space for making further investments. In fact, in the last month or let's say 6 weeks or so, there have been several reports which suggest that the private investment is, uh, is picking up indeed in the economy. Of course, it needs to be seen how far it goes and what is the depth of it in terms of both the number of sectors involved and the quantum. But largely speaking, larger companies seem to have cleaned up their act through this period of the pandemic. Uh, and because they are the ones which typically are listed. So in India, I think there are about 7,500 odd companies which are listed on the stock markets, while we say that we've got more than 6 crore MSMEs. So in the sense that, in that sense, the stock market represents a small fraction of the larger corporate universe. And of course, these are all the large companies, more visible companies and more publicly exposed companies which are listed. So they seem to be certainly doing well. Now, of course, there could be, as I said, there could be certain sectors like tourism or hotels or restaurants. Those, of course, will have a much longer period of stress, and some of them, like programs like tapping into the credit guarantee scheme which the government had launched last year. I think that's the kind of remediation available for them to kind of stay afloat and bring in the have the capital support to pay off their employees. But of course, and there's no doubt that those sectors will see much more pain compared to the larger, more formal parts of the economy. Also, in India, one challenge always has been. I mean, we know this; it's not a new thing, but I think it kind of plays out differently for different companies in the time of pandemic. Is that our companies are on a journey of formalization. So even companies which are registered may not always be very digitized or may not be computerized, or they may be doing all of this manually. So there are different types of jobs which are there. So what would have happened is that the jobs at the lower end would have seen much more stress.
Yeah,
Companies would have essentially would have just kind of asked some of the people not to come to work who are doing functions like accounting or basic office work.
yeah.
So some of that adjustment, as the economy bounces back, those jobs should hopefully come back. So, one, I mean, the stock markets being forward-looking, and two, stock markets being representing larger companies, which are generally more efficient and more well-planned. I think that's the reason why we see a jump here for future optimism.
Startups, they seem to be doing well, and they say that the downturn in China in terms of greater state controls over tech companies is also seeing a rise in the startup ecosystem in India. So this is a positive development. Is it sustainable? How do you see this going forward?
Yeah, I think the startup segment in India, irrespective of what's happening in China, was already looking pretty strong. If you see,
Mm.
we've minted 25 technology unicorns this year. Earlier this year, there was a report which was released by Credit Suisse. I think that came out in March or April, which said that India had 100 plus companies which were unicorns, which is like $1 billion plus of valuation. Since then, I think just the technology sector has added another 15 of them, right? So there are enough of these new companies which are coming up and scaling, either scaling rapidly or they are showing promise to scale in the future, which is why the investors are pumping in money in the form of equity, and the valuations have shot up. So I think this is a fairly bright spot for us, definitely. And if you, one good thing is that a lot of these startups which have minted money this year, they are in a variety of sectors. So be it commerce, be it educational tech, I mean, net tech, be it gaming, even the business to business companies like the software as a service, the SaaS companies. So there's been a whole range of areas. I mean, whole range of, let's say, the subsectors in which these companies operate, logistics, manufacturing. So it's a very encouraging sign that the global capital is now moving towards technology-led firms, which operate as
Mm.
technology-first mindset, and are expected to become big in the years to come. And of course, with the China investment tap being unpredictable, what the Chinese government is doing is that they are probably trying to. I mean, it's anybody's guess, but they're probably trying to reduce the cost of living for their middle class by going after the
Yeah.
commerce, tech, healthcare type, insurance type companies. So I think with the uncertainty which is created there, I mean, certainly Indian markets will also benefit. But even otherwise, the inflows were looking pretty strong. Our highest ever FDI inflow happened in the calendar year, 2019. Sorry, 2020-21. About 81 billion of FDI came into the country. Which also was another like almost 10% more than the 74 billion which came in the previous year, 2019-20. So I think we've had two pretty good years of FDI also. And what happens, Surya, is that once these startups start getting money, they buy out the equity held by employees. Some of them are listing in India as well. So these are good signs because this creates wealth for many more people just than the promoters. So, for example, if I had stock options, I was working in a startup, and when my company lists, or let's say a fresh round of investment comes in, even in the private market, the companies could be buying ESOPs back, right? So I may, for the fact that I've worked for X number of years in the company, I would generate personal wealth, and then most of all of these tech companies, I mean the engineers or the professionals working in these firms also go out and start new technology companies, new startups. So it's like a trickle down, which kind of creates new entrepreneurship, new business models. So this is largely very positive because this has got a kind of a positive domino impact in the economy in that sense. So I think something to look out for. I think it's quite possible that the architecture of Indian corporate sector changes substantially in the next decade or so, where these names which currently are not very well known, some of them become very big, not just in India but even transnationally, and start impacting or start positively contributing to the economy relative to the large old companies which India has seen so far in the last 50, 60 years.
Ashish, one of the points about this FDI thing is that it doesn't seem very visible. One doesn't get the impression that it's happening, that jobs are being created. It's a new kind of FDI is happening, is it?
So, since the FDI happens in the technology sector, the jobs are also going in sectors which is not physically. I mean, you can't physically see it, right? Let's say if I'm sitting in my home and working on
Yeah,
a
yeah,
coding or working on something which is technology related, it may not be visible, quote unquote, in the economy, on the roads, or in a physical shape in malls and so on, right? I think this shift, like as the economic structure shifts from being more physical to more digital, there's also going to be job shift, which will also need a skills
yeah.
shift, right? So people who are reskilling themselves or learning new technologies or learning new concepts, they are of course more likely to make benefit, likely to make use of this benefit from this structural shift in the marketplace. I think jobs, which is why maybe because more traditional stuff like construction, real estate, retail is still soft. Maybe that's why you
Yeah,
don't
it's
see
still
as
down. Yeah.
yeah.
So, I want to turn to this national asset monetization pipeline. It seems a huge push. Lots of ifs and buts there, isn't it?
Yes. Um, this was the National Asset Monetization Pipeline was launched earlier last week by the finance minister. What it says is that the government will use its brownfield assets. So these are de-risked assets which are available, but are
Yeah.
being underutilized. So, for example, if Railways has a stadium now, I mean, how many days in a year will Railways utilize a stadium for its own activities, right? So can they be quote unquote leased out? This monetization is not about selling the asset; it is about involving a
Leasing.
private party.
Yeah.
Yeah, leasing. I mean, putting in money upfront, where you get certain rights to exercise on that asset for the period of the contract, right? And each contract will vary. Like what works for a stadium will be different from what works for a road versus a gas pipeline versus a power pipeline, right? So I mean, each of those assets will have to undergo a specific contract negotiation process and contract structuring process. The duration may also vary. I mean, typically they're talking about 25 years of let's say private party involvement, but it could also vary by the type of asset that we're talking about. The concept is not new. I mean, this is something like toll roads, for example, right? So they've existed in India for a while, where the private party
Yeah.
collects tolls, they maintain the roads, and then they give it back to the government after the concession period is over. So as such, it's not something which is not known or not appreciated. What is happening is for the first time we are saying that we will follow a 4-year plan. There are yearly targets, there are sectoral targets, there are quarterly reviews by the finance minister and monthly reviews by Niti Aayog. I think that's which is why the focus on this activity will be much higher than it has been in the past. And we're not talking about land, etc. I mean, this is like proper assets which can be used by individuals. So the idea is to unlock capital here upfront. Government gets money upfront. About 6 lakh crores is the plan so far. And one thing which I liked about this idea was that the state governments have also been incentivized. So what the finance minister said last week was that if the states bring in their firms for either for privatization or divestment or just
They
monetization,
get, yeah, yeah.
they get a matching kind of. I mean, there are different percentages for different types of programs, but the central government matches some of that pot of money which they generate through the activity of involving the private sector. So this is redefining the the traditional PPP structures, which have worked in some cases, which have not worked in other cases. But there have been enough successes, for example, in airports, right? So today, I mean, if you're flying out of a Delhi or a Mumbai or Bangalore or Hyderabad, uh, just 7-8 years ago, the experiences was very different. Now these airports are
Yeah.
all world class, all privately managed airports, right? But just as late as 2014, 15, also things were not as rosy even in those cities, right? So the idea is to replicate the success. Of course, like in any large program, an execution risk will remain as to how long will it take to adjust to these new realities and how successful these players are who will bring in their expertise. So that remains like a challenge, which is true of any large program.
Because I look at that plan for giving railway assets to private players to operate. That was also a very poor response. I think the terms and conditions were too stringent.
Yeah, I think some of it will also come with a bit of a trial and error in terms of the policy structure, right? So what might work, what might attract the private players. I think it's part of the ongoing process. They'll be learning on both the sides, policymakers as well as the corporates who are bidding for some of these assets will also kind of learn from their experiences. So it will need not necessarily be. It's not that something will happen like all 4 lakh crores will be bidded out, or
Yeah.
all 6 lakh crores will be bidded out like next month or next year. But it might be a little bit of a back and forth. But I think structurally, this what the government is trying is to generate upfront cash flows and also allow some of these assets to be available to the country at large, right? So I mean, like, I think stadiums have got a good example because they were the most visible assets. Like, I mean, we
Yeah.
make stadiums for different activities like Commonwealth Games, etc. But they're not really used, right? I mean,
Yeah.
those apartments built, the sports villages built, and like in Pune where I live, there was a Commonwealth Youth Games, and the hotel built for that was eventually given to a private player to operate because what else would the government do with that
Yeah.
property as such? So I think this is a the idea has been there. I think the important point now is to really ensure that the contracts are rolled out well so that the participation is attractive.
So, last question, Ashish. If you are, say, sitting in Geneva and you have meetings with foreign delegations and all that, what would you tell them about the India story? What is it you're going to? What is your pitch?
Right. So, see, India has always been a large market. It has been a large market which needs uh, addressing the needs of the society of the consumers in a specific way. Uh, we've been open to investments. We've been open to new products, adopting technology. Today, we have one of the most connected economies anywhere in the world, especially when it comes to
Yeah.
financial services. So, creating a plug and play business which offers products which work in India is much easier today than it was, let's say, 15, 20, 30 years ago. We are one of the most open economies in terms of investments as well. I think what the firms or what the global investors need to look for is to be patient with the India growth projections, India growth plans, and tap into this what we call the 5 trillion economy, 5 trillion GDP economy, which will produce a huge consumer class in the times to come, and both as a base for manufacturing for local consumption as well as for exports. What India offers is a proposition. I mean, of course, China is far ahead of us, but at least in a world which is looking for resilience of supply chains, a China plus one strategy or a de-risk strategy. I think there's no better alternative today than what India offers. So I really hope that some of that is picked up in the times to come.
Well, we're at the end of our time. Aashish Chandorkar, thank you very much, and good luck in your new assignment. Let's hope you're able to, make your imprint on the policy process and push things forward.
Thank you,
Pleasure
Surya.
talking to
Thank you.
you.
Thank you.
Pleasure talking to you, Ashish. Thanks very much. And for all of you out there who are following us on our website, on YouTube, on social media, Instagram, etc., keep coming to us with your comments, observations, track us, subscribe to us, and look forward to meeting you again next time. Thank you very much. Good night.